I'm joined by Sebastien Galy. He's from BNP Paribas, and he's in New York. Sebastien, thank you very much indeed for joining us. It would seem that it's every man for himself going into this meeting. What do you expect?
Well, that eventually it won't be every man for itself. We actually are converging towards some form of agreement. I think the threat is on one side potential problems in terms of trade frictions going forward, and on the other side we have the Federal Reserve hinting for very aggressive quantitative easing. And the more signs are coming out of China and Asia that they will actually maybe go for some kind of a currency agreement, the less aggressive has been the tone in terms of quantitative easing coming out of the Fed. The more they will eventually print money. The last number was 500 billion today. The lower the dollar would go relative to the rest of the world, and of course that would somewhat destroy the foreign reserves held by Asian currencies in the U.S.
Except for China, which of course is in a de facto currency union with the United States. They're already warning, saying that, well, it's going to be inflationary for us. Well, what more could they do? They've raised rates, but that's not enough, is it, for that?
No. Essentially, they're operating at an interest rate which is way too low. If essentially they've given away their monetary policy to the Federal Reserve, which is not particularly helpful in the longer run. And this is where we're essentially heading. We have to get a break, and that break will happen partly through raising rates eventually in China, as it's already started. And I think that was a very strong signal from China that they were willing to go in that direction. And the second element which will come, and this is where people are hopeful, given the signal out of China, that they will also let their currency appreciate. At the end of the day, a combination of the two will be helpful for China. It'll also be helpful for the United States, as basically we'll get some form of marginal rebalancing of consumption globally, and a little bit more in Asia, and a little bit more production and exports coming out of the U.S. It's not going to be a big bang. It's not a Plaza Accord, because what's going to happen is it's going to take a month and especially years to reestablish a situation which is a bit more normal. So what we're looking for at this meeting probably won't happen, but we will get the first hints, will be some form of targets. For example, current account to GDP targets for Asia, maybe some implicit targets on the fiscal side for the U.S., potentially for Europe, some promises which are checkable by the IMF going forward, so that everybody can look itself in the eyes month after month between Asia and the West and check that the progress is being made and going forward, and they all trust each other.
Well, progress apparently is being made. Jim Rogers, we were talking to him earlier, and he suggests that, well, it's just that we don't really appreciate it from China's perspective, if you will. Let's hear what he had to say.
The Chinese know they have to open their currency. They've been opening it slower than I would, but they've been opening it, more so than apparently the Western press understands. It's a problem that they are not addressing it fast enough, in my view.
Well, yeah. Sebastien, what do you make of that?
I fully agree. I mean, actually, everybody's doing the right thing. The only question is really speed. And the reason why the West wants it to happen faster, and of course Asia is reluctant because of its experience with growth and past crises in the past, is that in the case of the US and in the case also of Europe, they are also still on the edge of something very bad happening there. We need sufficient growth in Europe, and we need sufficient growth in the US, because parts of the US and parts of the Europe are highly leveraged, and they need to have enough growth to be able essentially to pay their debt. Some of them, actually quite a fair chunk of it, is actually being paid back towards to Asia. And therefore, the fear in the U.S. and also in Europe and some countries, which are the peripherals, for example, let's say, Greece and the other ones, they actually need to have that growth. If they don't have it, then we're in trouble. We are also potentially in trouble in the U.S. It's not because growth is okay in the U.S. that we're not in trouble. We need to grow faster to be able to deal with the debt issue in the U.S., which is a more critical issue than what we have in Europe. But what's happening is, because there's a diversification out of the dollar into the euro is very high, and that means also that Europe has a competitive problems if it has to stay at this level of the currency. So something has to adjust. The dollar needs to adjust towards relative
Sebastien,
to Asia. It's going to take several months. Yeah?
We're out of time. Thank you so much for joining us, Sebastien Galy there. He is a senior foreign exchange strategist at BNP Paribas there, talking to us from New York.